This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashivithis. Thanks for joining us at XM.com. A sense of nervousness has descended on global markets once again, with traders slashing their exposure to riskier assets and taking shelter in the only hedge that works, the mighty US dollar. The reserve currency has been riding a perfect storm thanks to its unique ability to provide attractive returns and protection, rallying both when investors fret about central banks raising rates at a faster clip and when recession concerns eclipse everything else. There's also no alternative. A deepening energy crisis amid worries that Russia is about to cut off gas supplies to Europe has bulldozed the euro by depriving it of its historic trade surplus and dampening the outlook for economic growth. Euro-dollar is down more than 4% already this month to test parity for the first time in 2 decades. With the ECB reluctant to accelerate its tightening plans and defend the single currency, there isn't much left that can stop the bleeding. Some good news on the war or a meaningful cool-down in U.S. inflation might do the trick, but aside from that, the outlook for euro-dollar looks grim. The safe haven rally in the dollar has snowballed into an avalanche of epic proportions, burying every other major currency. The Australian and New Zealand dollars both hit new 2-year lows today, resuming their downtrends amid concerns that a global slowdown might have a disproportionate impact on economies that rely on commodity exports. Sterling has been caught in the crossfire too, sinking to levels not seen since the depths of the pandemic, partly because of the rampaging US dollar and partly due to the UK's enormous twin deficits, which leave the pound exposed to any shifts in global risk appetite. Speaking of the S&P 500, it lost around 1% yesterday, and futures point to similar losses when the market opens again today. Investors might be equally nervous about tomorrow's U.S. inflation report and what the major banks will signal about the health of consumers when the earnings season gets rolling this week. In the commodity arena, even gold could not escape unscathed. Bullion has been caught in a vice between a US dollar rally that's gone into overdrive and real treasury yields that won't stop grinding higher. It has been a case of all news is bad news for gold, with the precious metal suffering during both inflationary and recessionary bouts of concern, since inflation fears propel yields higher while recession risks turbocharge the dollar. This was today's Daily Market Comment. Thanks for joining us at XM.com.